Hey guys, welcome back to another episode. Today we're going to take a quick look at Autodesk. This company has taken quite a hit after earnings. In the past 5 days, it's down about 21.24%. We can see from its 52-week high, the stock is definitely down a nice amount. It's down roughly 25.29. And this is not, I want to say, a new business or a company not generating strong growth. It's generating strong growth, positive in cash flow from operations, and it has a great product with huge optionality. So in today's episode, I want to take a quick look at what happened in earnings. Why is stock price down so big? We're also going to take a quick look at just a general overview on the company. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas for you. And I also have this free newsletter where I share all the important information that I keep in track of all the stocks that I follow. Remember, that's 100% free for you. So like I mentioned, Autodesk, they did report earnings November 23rd, and stock price did take quite a hit. So for those not familiar with Autodesk, they provide software solutions. So the main way Autodesk makes money is subscriptions through the revenue of their softwares. Let's say you are an architecture, an engineer, or in some construction firm, and you need to kind of build these projects and lay them out in some form of software. You're most likely using Autodesk. A lot of my friends who are civil engineers tend to use this software a lot. If you are maybe an engineer that's designing new products or in the manufacturing plant, you're probably using AutoCAD again to kind of develop that plant or to innovate that new product. Finally, if you are in the media or entertainment, if you're making some form of rendering, of 3D animation, of modeling, you are most likely using one of Autodesk products as well. So if we take a quick look at this overview, Q3 revenue was about $1.13 billion. This was up 18% year over year on a constant currency basis. The free cash flow was $257 million. So we can see this is a company that is positively, it has a nice amount of cash flow coming in. Subscription revenue, which I mentioned is most of this company's revenue, is roughly 95% of total revenue, and it was up about 21% year over year. Revenue grew double digits both in their products and also in the regions that they hit. So like I mentioned, right, they have different things like for engineering, for architects, for manufacturing and others, and they also have for media entertainment. We can see all of these products are up double digits. Architecture was up 22%, media entertainment was up 19%. We can also see overall in geographics, they're also up double digits. In the APAC region, they're up about 18%, America's up 18%, Europe, Middle East, and Africa up 19%. So strong double-digit growth. They also kind of did give guidance for this final year. They are in their fiscal year of 2022. A bit confusing sometimes, but they are yearly 1 year ahead. But total revenue is about $4.367 billion, and that would be up about 15% year over year. Their billing revenue would be about 4.7, and again, up about 15%. And they would estimate about free cash flow of about $1.4 billion. So they have more than 25% free cash flow margins. You can see how strong this company is, and that cash flow is super positive. One thing that they did mention, and they kind of, I do believe this is one of the main reasons stock price is down, they did reduce the midpoint of billings and free cash flow guidance. And we're going to take a quick look at that, but obviously we don't want to see guidance being reduced or downtracked. One of the main reasons I believe this stock price is down. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. Some highlights, right? We can take a look. Flex, they did start doing this Flex consumption model. Our consumption model started in September, and it's a new way to subscribe. So previously, if you wanted to use AutoCAD or any of these services, you would have to do a yearly subscription. And there were some companies that said, hey, I don't really want a yearly subscription. I only use it for a certain amount of projects, so it doesn't make sense for me to do a yearly subscription. So AutoCAD came out with this token service that, hey, instead you can buy tokens, and every time you use AutoCAD, you pay the tokens per day. So now you don't pay the yearly subscription, you only use it when you need it. It's definitely grabbing some more attention to the company. They did mention 3/4 of new customers are grabbed from digital channels. So we can see this overall digital move is really improving and helping out the overall company. One thing I do want to mention, another thing is Q3, they purchased about 980,000 shares for about $287 million at an average price of $293. Remember, Autodesk at this level is about $21 and is about $255. So almost $40 cheaper than they purchased in their average price. Now, some things to know. I mentioned they did reduce guidance. The main reason is supply chain issues are halting projects and slowing down CAD needs. So right, you were saying, hi, hey, Jose, how are supply chain issues affecting a software company? Well, if you are, let's say, an engineering firm, a construction firm, and due to supply chains, you might not be working on as many projects, then your engineers or your people who are working on these CAD softwares don't really have projects to do. So there's no need for these companies to resubscribe or to get new subscriptions for new seats. Another thing that they mentioned during the earnings call is they want to reduce the real estate portfolio. It does seem like, hey, this kind of working from home for Autodesk has been really, really beneficial. So they want to reduce their real estate portfolio by 20%. Then they want to use that money for growth elsewhere. The final thing I wanted to mention on things to know is the leadership is very happy about the overall infrastructure deal. And obviously, right, one main reason, more construction means more people are working on things like AutoCAD, so maybe more subscription revenue. The second reason is there is about $100 million portion in there for improve the digital assets of the Department of Transportation. Obviously, digital assets would be software like Autodesk. So leader is very excited about that. One thing leadership did mention is this guidance that they gave does not include any kind of foreseeable revenue or any type of revenue that could come from the infrastructure deal. So right now, I want to say Autodesk to me is a tier 2 company, one that I wouldn't mind holding maybe like 4 or 5% of my portfolio, maybe 2 to 5, right? Nothing too crazy. The overall price right now, I think price is really good right now. It's more of a heavy dollar cost or mid dollar cost averaging position. It's not overextended at all, so I like it a lot. If we take a look at Autodesk EV to EBITDA forward ratio, right now it's sitting at ratios last seen in around March, May of 2020, so early mid 2020. So I believe a good portion of the risk has gone down. Obviously, stock prices can continue to go down, and that's the great thing about volatility. Sometimes we get even better buying opportunities. This is not a company I own, but a quick bullish case on Autodesk is CAD software is needed in countries that are developing new cities, developing countries, right? Software like CAD, like Autodesk is definitely needed. Animation, digital entertainment is still growing. Gaming, you're using Autodesk. Manufacturing, right? Manufacturing plants are still growing. New products are being designed. Again, Autodesk is a company and a software tool that I don't see ending anytime soon. And again, a lot of my engineering friends also use this platform almost on a daily basis. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.